How do you maximize your annual income? Hey, what's up guys? Hope you're all well. So this video is fitting for the time of year, which is the end of the financial tax year. So everyone will be looking to maximize their income and pay as little amount of tax as possible. But how much money do you actually pay yourself to pay the least amount of tax? Or what's the most that you can take out of a company without paying huge amounts of tax? And that is what we're going to talk about in this video. And I'm going to talk to you about what I do to try and maximize the amount of income that I can get with paying as little amount of tax as possible. And why I feel absolutely morally fine about doing it, because my contribution in terms of tax overall massively outweighs on what I take out, including things like education and health benefits. So let's get straight into it. If you are a historical property investor that has held rental properties for the last few years, you will no doubt be being hammered by personal income tax with the new treatment of interest charges when it comes to mortgages. And you've either started moving properties into companies or selling them off and paying large amounts of capital gains. And some of you may still be left with the odd one or two in your personal name. And if they are HMOs where the rent is pretty high, this is going to start to really affect the amount of tax that you pay on that income and what you can deduct with regards to the interest. But we are going to park that because this video isn't about the negative side, and it isn't about how you are in a position where you're stuck and you can't really get creative to maximize the amount of income and pay as little tax as possible. So that means if you have properties in your personal name, you either need to sell them or you need to find a way of getting them into a company or getting a large amount of cost deducted other than interest to bring your tax bill down. So moving nicely on to employment and businesses and limited companies. Now, if you're employed, you're pretty much in the worst place possible. And if you're in that middle bracket of anything from 30 to 60, 65,000, which is where the majority of pay as you earn career type people are, you are going to be hammered on your tax. You're going to be paying personal income tax and national insurance, and that's going to be deducted from you at source. So you are literally paying it every single month. And I don't say that to be cruel, and I don't say that to rub salt in the wounds. That is what it is, and there isn't a lot I can do for you in this video. I am really here talking to the entrepreneurial business owners who are building a business, building wealth, building generational wealth, and that is their goal. But how you can now start to take more money out of your business in certain ways to maximize it. And how I've worked it out is that you would have to be earning around £145,000 as an employee to be earning what you can earn by paying as little tax possible in the way that I'm going to talk to you about how doing it. So basically, if you ever got a job earning £145,000 a year, the amount of tax you would pay, you could be taking home the best part of £80,000 a year. And this is how I think you should do it. So we all know that the personal tax income threshold is around 12.5 grand. That's the threshold before you start paying income tax at the rate of 20%. But there is a lower rate where you start paying national insurance, which, as we all know, is high and is going to increase. And that's around 12-13%. So overall, at that lower rate, you could be paying as much as 33% in terms of tax just for earning a moderate amount of money. But if you pay yourself a salary which is underneath the threshold of the national insurance rate, you should be able to pay yourself around 780 quid a month. A little just over 9.5 grand a year, which is not too bad in terms of paying zero tax in terms of national insurance, and there is no employer contribution. That means your limited company is going to be able to deduct that cost completely and not pay any additional tax in terms of national insurance. That's kind of the easy bit out of the way. It's now, how do you take more money out of your company in the most tax efficient way? Now, I personally have been debating this and reviewing this and going over this with my accountant time and time again. And at the moment, in today's taxation, the most efficient way to take the next threshold amount of money out, which takes you up to the higher tax bracket of 50,270 quid, I think it is to pay yourself in dividends. So you get £2,000 dividend tax free. So the remaining amount of money is then taxed at the dividend rate of 7.5%. But remember, dividend is paid from profit after your company has paid corporation tax on it. So at the moment, corporation tax is 19%. So effectively, your net position on that amount is going to be 19% from the company and then 7.5% personally. So overall, it's not too dissimilar as if you were paying yourself a salary at a higher rate and your company then benefited from having that as a cost and not paying corporation tax on it. But the benefit for me and you is that tax, the corporation tax, is taxed at source at company level. So for me personally, I'm getting more money in my bank account every single month or every single year. You could pay dividends both, because the tax is paid by a different entity, even though the net cost is pretty similar. So I think paying yourself up to that higher rate of 50,270 quid or whatever it is better done as a dividend. And the tax that you do pay is paid at the end of the tax year. You don't pay it straight away. So in terms of cash flow, you actually end up benefiting, and you could maybe do more with that money by having it for a longer period of time. Or if you're like me, you just simply pay what you would pay in terms of tax into a different account. So that money is there to pay that tax bill at the end when it's due. And that makes it a little bit easier, knowing what you've got in your account is 100% yours. And if you do this right, you can end up paying yourself around 50 grand a year. If you've got a partner or your wife owns shares in the company, you can both benefit from this. So you can collectively pay yourself around 100 grand a year, and you'll only ever end up paying about 3.5, maybe a bit more in terms of tax at source for earning that amount of money. And to earn the equivalent of that, you'd have to be earning around 140, 150,000 pound a year collectively as a couple, to take the same amount at home. So this isn't about working smart. This is not about earning more money or paying yourself more. It's about working and paying yourself smarter, much smarter than a normal employee. That way you don't have to earn as much, but you can pay yourself a very decent amount of money. And then there's this moral obligation, this moral question about, should I be paying more tax? Well, I think if you're paying 19% corporation tax to then be able to pay yourself the best part of 50 or 100 grand if it's for you and your wife, and then pay some dividend tax, are you avoiding tax to the point where it's immoral? I don't think so. And more recently, I've come up against things like issues with the NHS. So I have private healthcare. So my burden on the society of cost in terms of healthcare is very, very low. And my children go to private schools. So the burden on the taxpayer to pay for their education is not there. And there are ways that I can tax efficiently, pay for those things and more, pay for expenses, pay for business costs from the business account. So my net income is pretty good because it's very, very tax efficient. And my moral obligation to paying lower amounts of tax is pretty good. I feel really good about it because my burden on the taxpayer is pretty low. And my own personal expenses are relatively low in comparison to what I earn. So that means it's not what you earn, it's what you keep. I get to keep a lot of what I pay myself. I don't have a mortgage. I have very, very low expenses. Majority of my expenses are done through business, so they're business deductible, not personal. And that means overall, I get to pay myself in a far more tax efficient way, and I get to keep the majority of what I pay myself. Which two come together is the best way that you can manage your own money, pay yourself in the best, most tax efficient way, and keep costs down for your company. So what do you think? Are there other ways? Are there better ways of paying yourself? I'd love to hear from you. Or do you just go ahead and pay yourself the highest amount and pay the highest amount of tax possible because you think morally that is what you should to do? Love to hear from you, but that's it from me. Hope you found the content rich, and I'll catch you all on the next video.